Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's Wednesday, halfway through the week. There we see on the screen, we see Swiss, dollar Swiss. We're seeing our interest rates slowly drift up, regardless if the Federal Reserve does it at this point. They just seem to drift up. We see the Swiss in the green. You see 4 days of a hinky plus, hinky ASCII bars plus. Let's tune into the other side of it. Where's that? Right there it is. Right there. You see it's sideways action for the actual value itself. Remember, hinky ASCIIs are like an averaging mathematical thing of open, highs, lows, closes, multiplied and divided, all that other fun stuff. You see here today we are flirting with a daily sell. And over here you can see this is still lifting on the J4X. Give it another hour or so, and it'll probably start to roll over. In the news today, what do we see going on? The dollar is a little bit weaker, nothing major, but we are seeing interest rates move up. We've seen that the European interest rates are having their excitement too at the same time. There's pressure on a lot of the different countries. And I guess, what it really comes down to is we are seeing the metals complex try to lift up after they tried to sell it down yesterday morning. Again, we saw more strength, which is really good. Just to make us feel like we're sane, knowing that the fact is that the what's the word I'm looking for there? I guess that the inflation is being respected on some level. I mean, that's really what it comes down to. Is it's a very confusing thing to watch the inflation factor not be, I don't know, reacted to or accepted, or I don't know how you want to describe it, but in the end result, it just seems kind of crazy to us. We really are confused why we don't see more buying in the metals complex. Just something, something versus nothing. Let's see. Checking to see if we're getting the right sound. Seems like we're getting the right sound. We get the right sound. Let's see if I see 33, 92, 33. Yeah, it seems like we're there. Let's just double check. I don't hear the sound now. Let's double check there. Why are we not hearing? Oh, I know. Maybe we moved the sound down on it. That's what it was. Let's give it a recycle. I can see the screen, but I don't think I hear me. So let's see. I don't hear the sound. So something is brewing odd. Testing 1, 2. Anybody hear me out there? I'm going to try this. So I see it moving around. Let's see if I just move something on here, just to make sure it's visual. Let's just go to the euro real quick. Yep, I see the screen doing it. All right, so let's go back to the Swiss. Right there. And I don't hear my voice. Let me just double check on another machine. You can hear me. Thank you, George. I appreciate that. Yeah, I don't hear me. I'm not sure why. But I did move one of the computers around. Maybe I disconnected the speaker itself. Who knows? All right. You can hear me. All right, so let's go. Let's keep on moving on. So what we're seeing here is the what is it? What are we seeing? Oh, the interest rates are kind of moving up, and I think we saw now the 10-year is yielding something like 197 or 195. We're seeing the 30-year trading in the 220s, mid 220s or high 220s. And the only thing we're a little disappointed with is we're not seeing the metals complex move up as fast as we would like to see them move up. And that's the only thing. And I guess due to the fact that I always talk about derivatives, maybe that's part of the process, and that is that you don't need to buy the metals as much because you can buy puts and you can buy calls and you can do binaries, you can do all those things, and not necessarily have to, go running into the metals complex. And I and I think we came to that conclusion about a month back. We talked about it, how we really thought that that when we see the currency pairs moving around towards because of the inflation, but at the same time, we're starting to really realize that the current metals market is just much more stretched out. It's longer in character and nature, and so when you're buying metals, sometimes you get a reward out of it in a couple days or weeks, and sometimes you don't get rewards out of it for a couple years, and that seems to be the real focus of it anymore. But we would be happier to see at least a 30, 40, or $50 pop to show us on the upside that in gold, or at least $100 pop to show us that we're playing near the all-time highs. Instead, I think we're just like 18 and change. Let's just take a look at it on J4X real quick. Right there. Yeah, 1827. No doubt we're up for the day. And they're doing some buying in there. But we're disappointed the fact that the all-time highs is somewhere around the 20, something like the 20, 21 and a half area, 22, so it's like, why such the discount when we have 40-year inflation? That's probably my biggest concern out of it all. And I guess what it really comes down to is that the derivatives are resolving that issue. That's pretty much how it goes, it seems like. So in other words, they don't have to run towards just buying metals. What they can do is they can just go off and buy calls or buy puts, depending on the product they're trying to hedge, or put on binaries, or something of that nature. All right, let's jump over to the euro again, and we'll take a look at what's going on there. Where are you, euro? We saw it pushed into the daily sell there yesterday. Let's put it up on Chicago Quant. There it is right there, and you can see a couple of days of down action. Now today it's lifting up, and at the same time you can see we are in a weekly for a second full week. So we're not really convinced that this is just going to park itself underneath here, and we're kind of thinking that it wants to play the upper end of the 50 percentile right here between the black line and the green, and we'll see if they finally get moving along in there, especially if interest rates do move up a little bit more in the European Union. If that would happen officially, that could be a very positive thing there. One of the other things about interest rates that really disturbs us, or let's say things that disturb us, is the interest rates. So in other words, we don't see gold or silver trading at near all-time highs. We don't see that. And we don't see interest rates a plus in a lot of in the official European Union itself. And that's really something we'd like to see. Just to show us that the concern to inflation is there. I think more than anything else, though, is that the inflation will disappear quickly, not like it took in the 1980s and the 1970s to come down. So, all right, and from there, we drift over to, you can see right there, this should start to turn, I guess maybe if nothing else, you can see here, this minus action that we've seen for the last couple of days. Let's put a red line in there too. This minus action pretty much may be short-lived, and the next thing you know, they'll start taking this thing back up again. So it went into the sell there yesterday, and we're not really pressing down that much. Now let's look at cable. Right there, cable is lifting up. I think it went into the buy. Let's see. No. It's flirting with it today. It's got the red and the green showing us some volatility. Thinking this product too. Now, they've raised interest rates twice in England, so we're starting to see some, at least we're seeing some adult supervision when it comes to world markets over in England. We did see a strange statement put out by the Exchequer yesterday, but what else is new? Something about don't ask for any more money or something like that. And what else can we say about cable? I guess that's about it. In the sense of on Chicago, you can see we are just flirting on the edge of getting back into the weekly buy. That would be very interesting to see this thing close in a weekly buy this week, or start to trade above the zero line and be in a daily buy, and we'd start to think that we're going to see that yellow or the 0.618 on the way back up. That's where we see and believe that we're going to see the currency, in this particular currency, the cable. Just for the fact that they are raising rates, they're trying to defend against the inflation. And whatever the Exchequer came out yesterday, the head of the Exchequer came out and said something about don't ask for raises and don't expect more money and things like that. It was kind of like, why do they do that stuff? All right. From there, we zip over to the Turkish Lira. Let's see how it looks against the dollar this morning, right there. There we are. I saw Aragon was over in Kiev, so that's pretty cool. And you can see here, they tried to go into the sell, but we got a red and a green on that, so we're still in the buy. And you can see the weekly is lifting up, but you know, this free put that the Turkish government has gives to everybody now buying the currency has really smoothed out, really protecting it, and at the same time making capital not as fleeting. So in other words, money comes into the country and it stays. That's a very positive thing for growth. A lot of people think that industry, big industry, is the industry that really carries the country, but it's not. It's what we refer to in America as the ma and the pa, the small little stores. They start off with 2 people or 3 people. Next thing you know, they have 10 people, and next thing you know, if they're still growing, they have 50 people, and next thing you know, they have 150 people. And if you look at something like a General Electric, or you look at Royal Dutch Shell, or British Aerospace, or Deutsche Bank, or Commerce Bank, you see any of these other companies around the world, what you find is that they might have 40,000 employees or 30,000 employees, but they may be down from, say, 35,000 or 55,000. So they're not growing anymore. They exist, they're there, but they're not growing. Whereas the real winners are the real winner to the economy is the small business. And that's why I'm always scratching my head when the central bankers they try to tell us, don't worry about growing. It's like, no, that's where we want to grow. We want to grow down at the grassroots level. Now let's drift over to the euro against the Turkish lira. Right there. Again, seeing lots of strength in that. And right there. It did fall into the sell there yesterday by the hair of its chinny chin. You can see that, just a minus on the plot 1 and plot 4. And now it's trying to get back into the plus here. We can see the weekly launching itself up very comfortably. And we think this thing will probably try to trade at the top of the histogram itself. It may even have problems at the yellow dots, that type of thing. It might even give us problems there. We don't really expect to see this thing take off or, have an explosion on any level. We kind of think that it's just going to stay consistent like that. Now, let's see, what else can we say about that? I guess that's about it. I'm trying to think. I'm curious. I'm looking on my connections and trying to figure out why I'm not hearing sound. I kind of want to think it's some type of button I need to push. Not that. Oh, there it is. Now we got it. I see what it is. There we are. Now I feel better. Okay. Oh, there it is. Now we got it. It always bothers me when technology has an influence on my broadcast. It's just like, oh, I can't take that. It always bothers me when technology has an. All right, now I'm happy. I can hear my sounds. All right, so from there we jump over to the Canadian. Let's see what the Canadian is up to. And there's Canadian, just sideways, but look at that. We're pushing hard down today. So maybe we go back in the sell, maybe see oil move back up. I don't think oil exactly fell down that much to begin with, but just looking for, some positives in there. And there's the CAD. You can see we went red, then 2 days of green, then red, and now we're in a green again. Same situation with us over on J4X. You see red, green, green, red, going in and out. Now we're back into a green again, just like we are on J4X, right there. And then let's show the lines right there. You can see we are down at the bottom end of the range. And we, you can see that before, and they bounced off of it and then moved down again. Let's see what this brings. It could, we could see this. You see the weeklies trying to pair back right there. So we could see with this daily sell some downwardly action, because I don't think we're going to see much down action when it comes to the oil market. I think they're relieved that it looks like, I heard Mr. Putin actually saying today, he said, it's not us, it's the West that's creating all this provocation against us. So, and then someone said, well, what about the 140,000 troops you have along the border? There was no response to that. But I guess you got to park them somewhere. And if you're paranoid in the sense, or nervous in the sense, or you just want to raise oil prices, then that's the place to park them. Park them where it looks very provocative. But in the end, I don't really believe there's going to be any real war there. I don't really believe there's room for war anywhere, really. I mean, you have minor skirmishes, but I don't see, like, what do you call it, Taiwan or Ukraine. I just don't see that. I see posturing, but I don't see actual shooting. That's the way I see it as I take a sip of my tea there. And West Texas is down a little bit more today, and so is Brent. We're looking at them having some pressure. We'll just show it to you real quick over here on the J4X. There's Brent. You see the last couple of days pressing down. That means less concern about war. Same thing here with West Texas Intermediate, both pressing down. And we'll even give you a little flavor of it over on the Chicago Quant real quick, and then we'll shoot. That's where we usually go after the Canadian anyway, so it kind of fits the scenario there. And you can see it there on that, Chicago Quant at the same time, pressure down, second day in the sell, but the weekly looks firm. Doesn't look like there's any real sign of movement heavily down. I would think that due to winter months, due to the military buildup along the borders, you just would have to assume that the oil market is going to be sideways. So you're in a daily sell for a little bit, but overall the action will be as the just sideways. Unless we see the weekly start to break down, I don't see any particular reason to expect anything too bad out of the oil market. All right. From there, where do we go from there? Let's see. From there, we shoot over to the South African Rand. So let's do that. A little pressure on it this morning, interesting. And that would be logical because I think, let me just show you what gold looks like, just real quick. Last I looked, gold was up by $12, $8, $6, something like that. Let's see, there it is, April gold. Now it's it had closed yesterday at 26. Today's high was 30, so it was up $4. Okay, I thought it was more than that, but at least it's holding firm. A little curve here, right there. See the same thing over right there. It's starting to meet and press against each other. And let's put the RAND up there. You see the RAND trying to move down a little bit. And the same thing over here. RAND is red and trying to move down. You see the white line has pierced, just like our white line has pierced. You know, the zero line. And it's pierced the slow stochastic. We've been in a weekly sell for a while here, so we keep on thinking it'll go down and touch the 15, but every time it remotely looks like it's going to, it stops and moves back up again. But oh, we can't even get up to like a 3-week high of 1856. So we'll sit there and they'll dance along and so forth, and I'm sure they'll roll sideways like that. But it is nice to see the weekly down here. Let me just show you right there on the gold. You can see it's trying to climb into its weekly buy again. And then from there we take a look at ruble. We would think it's down. Yep, down it goes. And we've been in this sell since here. So the foreign minister came out somewhere around in here and said, absurd, we're not invading anyway. And so you can see the pressure is on the downside. We haven't seen these lows since November. When we tighten it up even more, the 70s were played with in October. And that was a pretty big low. We haven't seen October. We haven't seen the below 70 in just over a year. Because there's that's September of 21. So is that right? No, that is December of 20. We haven't been. That's the low we made here in. What would that be? That would be November of 21, and it's been running up since. This was the Ukraine thing, and obviously, when we go and we look at the oil complex, it's the same way. Right there. It's running up the same thing since November. So they front run the noise, and boom, it took off. Took a little while to get it through the weekly, but once it did, it ran from the 70s to the 90s. But again, we are convinced more it's just posture. All right, from there, let's widen ruble out again. And there's ruble right there. Nice, slow, steady slide down. I'd imagine the more negotiations go on, the more there's talk. In the end result is that, and there's less shooting. Then in the end, it'll just be a big profit. I mean, you have to imagine that I don't think they called up reservists or anything. This is the standing military. They moved towards the border, so they have to have them bivouacked somewhere. So what's the difference if they do some war games? That's part of the situation of the military. You need to train and maneuver and so forth. And you can see at the same time, the oil complex lifted so nice from the 60s all the way to the 90s. So, it's a 33% increase in the price of oil, which fills up the bank accounts there for the Russian Federation. Like I said, they got to move those troops around no matter what. So you put them in the right spot, it'll push up some asset values. Now, from there, we go over to the yen, which yesterday we saw. The yen was being strong and the gold was being weak in the morning. But then gold did turn around and get going. And we saw strength in both. And you can see there we are inching our way up to this 5-year high. You can see, though, the weekly is really anemic. I guess is a good way of describing it. It's kind of just weak, leaky, you know. We'll see if it climbs out of that by the end of the week. And since the daily, as you can see right there, is just holding up. If this does go and take out the 5-year high, I would imagine it'll lift up the weekly, and it'll be another week of just inching along. I don't know if there's anything more concerning. I don't see it. The yen has been moving up. Like I said, it's at a 5-year high, which is kind of surprising. But then again, interest rates are shifting. So with interest rates shifting, you have to imagine that the currencies will play the extreme of their ranges at this point. So in other words, the dollar will be trading at its weakest level of the range. The Swiss and the euro and British pound should be trading at the highs. Well, no, the British pound and the euro should be trading at their highs of the range. The Swiss should be trading at the low end of its range. That type of thing. All right, and last but not least, we'll go over to the Mexican peso. Right there. And it is moving down also. And we keep on thinking it should do that. It should fall back into its natural range. But we didn't even see yen. Let's see yen on here real quick. Yeah, yen with all the 4 hinkies moving up. Okay. And we're getting towards the top end of the range there. Now the Mexican peso, right there, playing with the bottom end of its range. You see it right there, and you can see it right there. And we figure it's going to carry on back and forth inside this zone again, like that. Just bounce along in there. And this just happened to be part of the wild negotiations that went on with Mr. Trudeau and or the United States and Mr. Biden and the President of Mexico. And whatever was said there obviously freaked out the currency for a short period of time, but it seems now to be moving back into its natural range or instinct, something of that nature. All right. On to, from there we go to, let's see, what's that? Let's move that out of the way. There we go. And from there we go over to the rest of the metals complex there. So we'll shift down. Let's see, where's that? That's crude. Oh, we'll do energies then. Okay, energies we can do first, and then we'll go look at the metals complex from there. All right, so here is, where is it? Right, I just saw it. There's Brent, coffee, copper, cotton. There it is, light sweet, right there. You trading at 89. We were up as high as right there, as you can see. We got up to about 92.06. No, 93.17 was our high. So we're down almost $4 now. Where are we at now? 89.12. So we're about $4 off our highs. 2 days in a sell now, but the weekly looking firm. And then let's take a look at the Brent right there, same situation. Off its highs from the 94s down to the 90s even, another $4 thing. You can see weakness there. And that's the light sweet crude. That's the spot month. And then let's take a look at the back month, the June contract, see how they're acting. So you can see is that the June contract right there is trading at 85. You see that right? Let's see, where's it at? Right there. 85.23. And you can see, let's just throw it up on here again. The front month is trading at 89.03. So that's almost a $4 premium, or just, I'm sorry, discount. It's a contango. It's a contango of $4. So obviously they're not that concerned, or we'd see the back months higher, not lower. And then we drift over to the natural gas. There's U.S. natural gas. We are now flirting with the $4 area. We figure we're going to fall back into the threes. And you can see it right here. There we are. Same situation, getting down to the lows and a sell for going on a 5th day. The weekly is holding up pretty firm in here. But again, it is the winter time, so I don't expect them to be pushing energies out the door cheap. But I do expect to see the natural gas fall back down in the $3, high $3 area instead of the low $4 area. You can see it right there. And let's take a look at European gas. Let's see if it's still at 27. I imagine it might be breaking 27, being on at 26 and change. Is that it right there? I think that's it. No, it's lifting up. I'm a little surprised about that. Yesterday it got down to the low 27s, and since we're falling down, I thought for sure they would be falling down, but look at that. They've popped up. Now, I know they've talked a lot with the Chancellor of Germany, and they talked to Mr. Putin and the French Prime Minister and so forth, and I think even Mr. Aragon is in Kiev talking with them. And I'd imagine that one of the biggies would be the conversation about natural gas. That's probably like the big one, because it's needed. There was talk of the pipeline, just all kinds of wonderful things. But about energies, and everybody was pretty happy with each other. It seemed like, they felt like they were all on the same page, and just all the basics that are necessary to keep everybody happy there. All right, and that's the energy complex. Now let's go take a look at the metals complex. See how silver's doing this morning here. There it is there, trading at 23.29. Bid. Let's see what it looks like over here. I can see 23.31 in the March contract. So they're pretty much matched up together with the J4X. What else can we say? Going on a 3rd day in a buy right there. We are through the weekly. Are we through the weekly on gold? Let's just double check that. Yes, we're through the weekly there too. So both of those are starting to move back up, which makes me feel like, okay, reality's coming back again. Some of the sanity that we keep on asking to see is actually happening, which is really nice. Because we are, like I said, perpetually confused when we don't see, the metals market react in some positive way. And that's the most important thing, is just the posturing. In other words, just the right direction. Just act like you care. That's really what it comes down to. Act like you care. Tell us in some simple way you'll go up in value because we have inflation. All right. So from there we jump over to, let's see, where's it at right here? And again, the silver looking very firm. It's a lot of work to get it up to the 25 area again. And from there we go over to copper. Copper was flirting on the downside last night, then lifted back up, and you see it's trying to move up again. And you would assume if copper, it's an industrial thing, you would think because of the industrial thing, you would think that oil would be going up, but it's not. We're seeing oil, on the downside. So, but the stock markets themselves have been exploding. Now let's see what, just a quickie, but let's see what the platinum looks like. Well, Bitcoin for the last couple of days is basically flat. Right. There's platinum. April platinum. Trying to lift up again, up into the 40s. So 1040. It's trying. That's all we can really say. More than anything else, it's trying. But it's going to take a lot of work to get it to the $1,100 area. All right, and that's pretty much the action we've seen in the energy and the metals complex. You know, Canadian heading down a little bit. Like we said, we're a little surprised. Let's just show you the Canadian again. Right there, and right there. And there's the Canadian, as you can see, trying to move down. Like J4X, it is in the minus. And, you know, it would be, obviously, it'd be very interesting to see this thing move down more aggressively. And I guess then we would see the oil lift back up again. And since oil is in a weekly buy, there's a good chance that pressure is more on the upside than it is on the downside. All right. Let's see. From there, we might as well take a peek at the stock markets and see what they're doing this morning. So we'll go back up to there. On the JFRX, we will take that and we will go show you the Tech 100 right there with the pressure. Is that right? No, that's natural gas. There it is. Right there, you see the strength in that. You can see it's turning up here on the daily. On our daily here, there's the Tech 100 doing the same thing. We went into a buy yesterday, and you can see it's lifting up more. You can see with the J4X, it didn't have a green yesterday, but today it does. So it's, you know, we're seeing that strength. At the same time, you can see over here, you know, the weekly is flirting along, trying to get into that buy, which is kind of impressive in its own right. And then, let's see, let's check it out on a short-term basis. You can see there, it is up 192 points right there. You see the daily, I mean not the daily, but the intraday itself right there. Went into a little buy, pushed up, and it's still holding on, but showing our little weakness here. But we can see with our 3.5 super that it's, you know, the histogram and the white line is still above. So this could be very fleeting. By the time they get it minus, they'll start to turn it up again. Now, yesterday was a really good move. We've seen that the Dow Jones Industrial Average is only like 2.5 percentage points or 2 points away from making it plus for the year. I think the S&P 500 is like 5.5, 6% below. And the NQs, or the Tech 100 on Dukascopy there, USA Tech IDX index, is about a little under 10% away from its to be flat for the year. All right, and then let's take a look at, here is the S&P 500. You can see that's up 39 points, which is a big move in that product. And you see it's trying to move up in there. Let's take a look at it on a daily basis. Right there. You see also second day in the buy. Let's see what it looks like on J4X. Right there. Doing the same thing. It's just getting into the buy today. You see the weekly has pierced yesterday and today. It's been that way. As a matter of fact, I think it started on Monday. The close of Monday it did that. And without a doubt was Tuesday for sure. And you can see the pressure is on there. And so we're seeing some strength moving into the stock indices, which makes sense because they do benefit from increased inflation. Any company that can raise their prices usually goes up in value. That's, you know, they can pass along the expense. That's where the inflation comes in. And that's there. Oh, and this, we jump back over on a short term. As we said, you can see it there. It's up 40 points now. The high is 554 and it's trading at 553. So it's just a 1 point off of the high of the day. You can see it right here. Went into the buy in this little area and it's still holding up, and now it's, you know, playing up to it. I guess, was that the high right there at 54? No, 53.75. So when did we see the 54? Let's see what the European Open was. No, okay. Right there. There's the, no, it's 44. So I guess, I'm not sure why we're seeing, where did the 44 come in at? It's offered at 55 now, so I guess we're making new highs again. Yeah, that's what we're doing. We're making new highs again right now as we speak. It's 55.75 is the high now. You know, there's just, you know, more money coming into the to the central bank, to the stock markets. Central banks are dragging their feet on raising interest rates, but the bonds themselves are going up in value, as we can show you right here. Let's go back to that daily chart. Let's do that on Dukascopy real quick. Oh, here is, there's the S&P. So let's take a look at the 10-year bond right there. Trading at 153.23. You see it there. There's the 30-year, 153 and change right there. You can see that. And the weekly still down, and the daily fighting to pop up a little bit. And we have taken out some lows in here, as you can see. Last time we were that low was a while ago. Let's go to the Dukascopy and let's see what J4X shows us when last time we were down in that area. Has to be a couple years. Let's make it the whole screen. That is back in March of 2021, almost a year ago. And you can see there, we haven't been down in this area since, what is that? That is that 2018 or that's 2019? Summer of 2019, so that's almost 3 years ago now. We haven't seen those areas. Interesting. All right, now let's go over to the S&P 500. I'm sorry, the Dow Jones Industrial Average. We'll take a look at that. That would be right. So as I say, the central banks are not all raising rates, but the market is already anticipating it and raising those rates for them. You can see here the Dow is trying to get up. Now this thing is only, like I said, 2.5%, 2% away from its yearly high. So, or you know, to be flat for the year. So that's not too bad. There it is right there. You can see it's trying to turn, just like we're doing right here. And closed in a weekly buy last week, and the pressure is on. We've had 2 volatility days in a row, and it keeps on climbing. And there's no problem there today. It's lifting up. There is buyers coming in because, again, these companies can raise their prices. Ah, there you go. 10-year note is trading at 193, and the 30-year is trading at 2.23. 5-year is trading at almost 1.80. It's at 1.792, and the 2-year note is yielding 1.33. So interest is being paid for those who buy bonds. I hope that starts to catch on in Europe. I think that's one of the big problems we've had, is the fact that there's too much money not collecting interest and having to pay interest, which shows only signs of desperation still. There was this whole financial calamity occurred in 2008, going into 2009. So here we are in 2022, going into 2022, and that is 13 years ago. And we need to see, that type of action. We need to see normality again. We need to see that healing is evolving and occurring and developing. We don't need, more money printed. They should have stopped printing money, 6 years ago, 7 years ago. The politicians have found that it's better to keep on borrowing and let somebody else have to pay for it. Classic as usual, and that is, always spending someone else. It's easy to spend somebody else's money in the end. All right, and from there at the same time, you can see there Dow Jones Industrial moving up on both charts there, both the J4X and the Chicago Quant. All right, last but not least, over here, we're going to take a quick look at what we consider like the weakest of our indices, and that is the Russell 2000 right there. And they took it down to its lows last week. Is that last week? 30.31. 2 weeks ago. So we went down to our lows 2 weeks ago and made something like a 2-year low or something like that. This is a long time since we've been down in that area. 1900 area. We hadn't seen a 1900 area for, I don't know, 2 years, I guess. And this is the weakest of our 4 stock indices that we all watch here in the States. The Russell 2000 has taken the position of being the more speculative one. You can see it's been in a weekly sell for a while here, since this area in here, since the 23.5, 24 area. And it's going into a buy and going into a sell, going back into a buy. Right. Oh, we fill that in. Let's put that in there. Right there. And then going back into the sell, right there, and then another buy. It's getting a little choppier, right there, and then now we're in the sell, and I guess we're also now we went into a sell again, and now we're in a buy again. Okay, so we have to change some colors there. So this one's going to be a green. This one's going to be a green. And this one's going to be a green. There we are. Let's widen that out a little bit. We'll see how well they treat it this time. Maybe they go challenge that 21. I myself think this is just a bounce. Let's see if we can put some, like here. I really think this is just a bounce. I think, at best, the Tech 100 can probably get up into the, the 15 or, 15.2, 15.1, something like that, 15.3 area. I'd be surprised if it got up and took out the 16,000. I think they'll just roll over again. Same thing with the S&P 500. It's doing it now. I can see it getting up into this 46 area and then rolling over again. Now, we are climbing into a weekly buy here, so that is kind of a sign of doubtfulness. We need to see that break back down again. And same thing here. You see it's a little moon shot, real launch off, taking off this week after going into a buy. So, and it's only, like I said, it's only a couple percentage points away from being plus for the year. So, I guess the best way to look at it this way is that maybe they come up, go plus for the year, and then roll over again. I mean, that's usually, we've seen many, many years where the stock market tops out again after selling down in January. It tops out in February and presses down. Now, we don't expect to see, very big aggressive pressure. We just expect to see pressure, nothing more than that. All right. And so that's why we're seeing that the speculative index perk its head up right there, the Russell. which is a pretty good move from 19 to almost 21. All right, from there, where do we go from there? I guess we go march around, take a look at some of the other products. See the grains. We could take a quick look at some of the grains and see, due to the fact we're seeing inflation, you can see here, oats are moving up to something like a 3-month high, right there. You can see soybeans, March soybeans playing with, I don't know, that's really high. Let's take a look at it on J4X. Last time we saw soybeans up heading for 16. There it is right there. Let's put a monthly in there. Make it the whole screen on J4X. Let's see, the last time we saw soybeans trading in the 16 area. So at the beginning of the year, I guess it was the summer or the fall of 2001 last year. So let's just see what it shows us here. No, not really. So the Hinky Ashi, oh, okay, that's a daily, that's why. Oh, no, that's a monthly. So we're looking at second quarter 2001, which is not really reflecting it. I mean, we are way beyond that. I'm not sure what that's all about. Maybe that's just the Hinky Ashi bars making it look like it. Because you can see there, that's April of 21, and April of 21 is basically right, where's April of 21? Right here. So it went up into the 13 area it's showing for the March contract. I wonder what this is. This is 1577. We're trading at 1577 right now. Okay, so it's 79's last, and you can see our offer is 1579.75. So this is there, but the Hinky Ashis have averaged their way up there already, which is really interesting. Let's see now. So these are the foodstuffs. Again, making things very expensive. I'm a little surprised to see that type of action on J4X. Just take a look at corn. Same thing. Corn is trading in some of the biggest highs we've seen since back in May of 2020, right there. And wheat, I think, has been perking its head up. It's not the most bullish thing yet, but it is showing some life in it. And the highs of wheat were in November. It got into the 850 area. So when we see these inflation, when we see the inflation to food and materials and so forth, here is a perfect example of it. Oop, didn't mean to do that. There we go. And you can see the oats. Another good example. And even then, they haven't taken out their highs yet, but they're pretty close. Now, soybeans, obviously, as you can see on J4X, is really marching along beautifully. Let's see, let's go to the daily again. Yeah, see, the daily looks identical to the Chicago Quant. It hasn't seen, okay, no, what is that? That's second quarter. That's May of 2020. Yeah, that's 2020. May of 2020. They're saying the contract was up there. Could have been, because we don't go back that far. May of 2020. Let's see if we can find something even remotely close to that. I guess that would be like right there. That's June. So we don't know, we can't see it on ours. We don't have the data. This is, Paris says, good morning, good afternoon, and evening, Paris. Do you use indicators? Yes, we do. We use, on J4X, we use a slow stochastic. Right here, that's what this is. Against a fast stochastic. It matches up to our mathematics. And we use Hinky Ashi bars. We call that the Manhattan strategy. And over here on our Chicago quant, we use our proprietary, and you can see that the daily match up to it to a certain extent. Let's see which one's that. That is soybeans, so let's put soybeans back up there again, right there. And you can see our math here is, we've been in a longer trend signal from our weekly signal from back here in the 12.5 area. And now it's trading at the 15.5 area or beyond, so it's going up $3 since it went into a weekly buy. This is the daily. When the daily and the weekly coordinate, a green buy signal here, you can see that the pressure on the upside is about an 85% accuracy rate. And you can see, in this case here, it never stopped until it has a red and a green. The zero line, we watched the zero line on our math, and you can see it broke it, but the problem is that we kept green dots. And the longer we keep green dots, that's why we do the hinkies over here. Hinkies are about a 68 to 69% accuracy to our dot system. And so we use the hinky axes on the bars, and we use the fast and the slow stochastic to try to match up to our mathematics. Because I use the stochastics to smooth out my formula. So I have a proprietary formula, and then I use overlaying strategies to smooth it out. Let's see, these lines right here, these two golden lines, are a 1 standard deviation of our formula. The green and the white histogram are a stochastic of our formula, and that's how that works. And it works the same way down here below. Does that make any sense to you? And so we're using over on J4X, the Dukascopy chart, we're using when the white line pierces the dashed line, it usually indicates pressure on the downside. In this case here, it's gone such an extreme, so it went into the buy here, played with it a little bit there, went into a buy again there, and now has gone into the sell, but we've got a green, so you really don't want to take the short, you just want to take profits out of it when using the J4X. For our math, we went into the buy right here, which is pretty much matching up to probably this spot right there. Let's see what the date was. The date was Jan 24th. You can see that's Jan 19th on a daily buy, Jan 20th, so 19. It went into a buy, stayed in a buy with our math, and we're in a weekly trend, so between the two, it tells us to stay long in the product. I hope that helps. How long does a trade usually last on average? Hard to say. What we like to find products, currency pairs and stock indices and commodities that trend long term, but it all comes down to basically different products have different cycles. Now I can show you on a short-term basis. Let me just tune into the short-term basis since you've asked. And here is basically the S&P 500. And you see this is on this is on a spatial bar, which means it's 1,296 contracts. And so it's an intraday trading on this. And you see it goes into the buy right here on that green dot, the histogram plus, and stays in the trend on the upside all the way till right there. Now you can see it didn't go minus here, it's all plus. So even when it fills, it still stays plus. You can see our work here is telling us that it's strong at the same time. Again, all our mathematics on a very short-term basis, intraday itself. You see it goes into the sell, not there, but right there. And then you can see it does a quick little breakdown. But we are at the highs of the day basically right there. So, we've seen products, go into trends, 2 weeks. We've seen products go into trends, 1 week. We've seen things go in the case of what we're looking at on the soybeans right here. Let's go back to that. You can see we went into an upwardly trend 2, 4, 6, 8, 10, 12, 13 weeks back, it went into a trend on the upside. So, we never have any power on, telling it when to not. What we do is we follow the math, and the math does not follow us. Does that make any sense there, Paris? And so you can see it on a short-term basis again. Like I said, we intraday trade just as much as we daily trade or position trade. We're more of binaries and options on a day-to-day basis. We'll marry them to a harder delta, in other words, a spot or futures. And when it comes to intraday, there's a lot more, short-term. Excellent. All righty, we're done for the day here. So, but Paris, come on back tomorrow and ask a question. We'll, try to answer it. So, traders, see you tomorrow. Tomorrow is Thursday. So, happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. Ta-ta for now.